I'd like to address the popular conversation now that people are having, and you'll hear it either referred to as creative financing or you'll hear the word terms. Either one of those simply means that you're selling non-conventionally. Now, as a seller, let me say that since the 1600s, if you picked up a book by Anderson Cooper where he talked about the Vanderbilt family, and he talked about buying real estate in the 1600s prior to banking. In 1981, according to the National Association of Realtors, when the average national 30-year fixed-rate mortgage was at around 18%, approximately 40% of all home sales utilize seller financing. And that 40% doesn't even include other home sales through other forms of creative financing. So I want you to know that creative financing is not by any means new. And creative financing simply means that you're not going to sell through a conventional buyer, getting a loan conventionally at a bank and coming in and purchasing your property. More likely you'd be selling on owner financing or seller financing, whereby you're going to receive monthly payments. That's usually great if you have no loan on your property right now, or in other words, you're free and clear. In each one of these methods, I'll explain in more detail in subsequent videos on the website here. You could also sell on a lease purchase. This is great for someone who has a loan in place and wants to lock in some equity that might be there, which may not otherwise be able to be had on the conventional market. Whether that's because you're paying a realtor or paying closing costs or whatever other expenses and you just can't get your price. And then there's a way for you to sell called subject to existing financing, whereby your loan does stay in place and you're able to still sell. So we'll go into those different videos after that will be after this one. But let me summarize by saying for creative financing or terms for you as a seller, you are best served if you don't need your cash right now. So if you're someone that because of family reasons or other reasons, you may need to take any and all equity out of the property that you have now and move it to another property, we're not your buyer and creative financing simply doesn't work. However, if you are someone who can wait for your equity and perhaps almost on every occasion get more for the property if you wait, then creative financing is a great move for you now. Important stats for you to know why creative financing is so immensely popular now and growing in popularity. If you look back at the early 90s, around 2 or 3% of transactions were done outside of banks. I don't have a legitimate stat that I can quote, but I can tell you that the amount of deals done outside of banks and non-conventionally, creative financing or terms has grown every single year. And it's become super popular with all the banking challenges going on, especially the recent changes that we've had from low interest rates to higher interest rates, which have literally pushed probably tens of thousands of buyers to the side. You have families that had their heart set on a home when rates were 3, 4, 5%, and then they jumped up and pushed those that were borderline out of the market. So right now, statistically, as of the time of this filming, if you speak to any top mortgage broker who writes 50 to 100 loans per year, they'll tell you that out of their applicants, about 17 to 20%, or 17 out of 20 out of 100 applicants can qualify for a loan in their current condition. And that's a lot of buyers. So 80 to 83% that can't qualify. Now, if that number changes a little bit over time, it's not going to be drastic. So what if 30% weren't qualifying? Or what if 30% were qualifying? That's still a very small number. Banks are very difficult and getting more difficult to work from an underwriting standpoint. Now, why do some of these buyers deserve a home still? Just so you know, as a seller, who we deal with. Well, a lot of those buyers, not all of them, have had a legitimate life event. It could be COVID, could be a death in the family, could be a divorce, could be a number of different things. And because of that, they have to fix their credit, and that requires time, and we help them get to the finish line to do that. Secondly, you have an enormous amount of population, especially since COVID, but preceding COVID as well, who left corporate America and they wanted to start their own business. Well, when they do that, many of them didn't realize or don't realize, even if they have great credit, and they have cash in the bank, so they're great buyers, but they can't get a loan today. They need what the banks call 2 years of seasoning, or 2 consecutive years of IRS tax returns. To make matters a little more challenging for you as a seller, and why the need for creative financing is going up and up, is the Wall Street Journal recently reported that fractured closings, and that's defined by closings that come to the closing table, presumably the buyer and everything else look good, and 20% of those are fractured, meaning they die or fall apart. So here you have a seller that was on the market for, say, 30 days, 60 days, 90 days. Then it went into escrow, and it was another 30, or let's say 40, whatever the time frame was, and then it dies. You just wasted almost half a year, and who knows what the market does in the meantime. So for that reason, I want to help you understand what each of these options are. But most importantly, send me an email to rick@colonyhomesolutions.com. We can get on the phone and chat and see if the situation would work for you, and if it's something we'd like to buy.